Very quickly, I'm Jeppe, I'm Northzone VC, and one of our investments is Zopa. Jaidev is the CEO. For those of you that don't know Zopa, it's a peer-to-peer consumer lender. It's Europe's largest. I think you were the world's first at the time. I don't know whether you use that title any longer. You're growing very fast. You are profitable. Things are going very well. I think you're even outperforming your competitors by a long way. So recently you announced you're also going to be a bank. So why change it all?
So you're right. The business is doing very well. We will grow net lending this year by more than 50%. We are profitable, and our customers love us.
And that's close to £1 billion this year, right?
It'll be £1 billion, yeah. And our customers love us, so net promoter score of 74 or so. And if you look at, and if you want to lend through us, there's a waiting list. So we've got more demand on the lending side, on the investing or the lending side than we can serve, despite the growth that we have achieved on borrowing. So yes, the business is going up, but that gives us the ambition to actually play on a broader canvas. And when you look at the market out there and consumers, there is a greater need for them to have providers that they trust. In fact, last week, the FCA, which is a regulator here, came out with a report that said, 6 out of 10 UK adults do not trust the financial services sector. And it doesn't have to be that way. If you look at our business, our customers love us, they trust us, they advocate for us. So we want to offer them a broader set of products and services. We want to be the best place for money for them. And to do that, we want to offer more products, and that takes us, and we want to really leverage the capability we have built on lending to offer those products. We want to offer them credit cards, we want to offer them auto finance, savings, and that takes us to the direction of being a balance sheet lender and a bank in the longer term.
And the audience has just heard from a number of other companies also taking on this market from different angles. So do you see Zopa coming from the lending side, going head-to-head with these companies, or do you see yourself as different?
I think we are uniquely placed both in terms of our strategy and our capability. So let me start with strategy, and then we'll end up with capabilities. So if you've heard number 26, Starling before, I think they're really focused on the current account. They want to provide this great current account and connect lending service providers like us on them. So I wish them all the success. I think the UK does definitely need better current accounts. And we think for a customer-led company, we are probably the only lending service out there in the UK that can meet the customer's needs and actually be a value-enhancing and an experiencing-enhancing space, because we have been doing this for 12 years, right? So our approach to be a challenger bank is actually very different from some of these new digital banks. It's also very different from the traditional banks or the traditional challengers, if you will, because they are mostly not digital, do not typically own their technology platform, cannot control their customer experience to the extent they would like. And thus, it's reflected in the low NPS scores that pretty much all of them have, with the exception of Metro, right? So our strategy is thus very different. And if you look at our capabilities, again, I think we bring the best of both worlds. We've been lending for 12 years. We lend profitably, we do not spend too much on marketing costs, and we actually can assess risk, and our lenders have made money each and every single year that they have lent with us. So that's an experience and track record that no newcomer brings to the table. And then when you balance that with the fact that we have a customer-focused culture, which is reflected in the net promoter scores we have, the customer loyalty we have, the awards we have won, the technology and the analytics capability that we have built. I think, to take a real example of that, to make it really real. So, if you go to Money Supermarket, which is where prime UK consumers go to find products, right? We are the only prime lender who can, if you go to Money Supermarket, actually offer you a pre-approved loan while you're on Money Supermarket. And we can do that because we have tons of data. We've got 4 million people who have applied to us. Based on that tons of data, we can build credit models based on machine learning. Everybody can use machine learning, but if you don't have the application and the data, then the models are not going to be any more brilliant than your normal logistic regression model, right? So we can build that. But then we have the technology platform that actually turn around that decision within 6 seconds, right? Which the legacy banks cannot do. And that allows for such a smooth experience for customers that we, for example, dominate that. We are the largest lender on price comparison side today in the UK. Despite never leading on price, or not having the strongest brand as compared to some of the incumbents that we compete with, HSBC, Barclays, Santander, right? We are ahead of all of them in the price comparison side business, which actually is the fastest growing channel in the market. So these are capabilities that I don't think the challenger banks any of the challenger banks bring to the table.
And if you look at the market, I think it's pretty clear what we've seen is a service-led demand generation. A lot of people want digital products. You and others are offering them. But if you look at the other side of the equation, the actual credit side, it's easy to lend money out, right?
Exactly.
So do you believe that everybody is talking about data and credit, but is there a differentiation to be had on that side of the equation?
Absolutely. So I think if you look at using the best, creating the best credit decision analytics, if you will, and the best credit decision engine, you need not one thing, but a few things to actually work together. So the first and the foremost is data. So unlike most providers, we have actually got through the cycle data that we can actually leverage. So that's one, which you can only get with time. You cannot buy that. The second is the right people, right? So the way we build our credit decision models is we've got people like me who actually manage credit risk through a crisis, but we also have got rocket scientists from NASA and CERN who bring in some of the best statistical techniques. And we combine the experience of actually managing credit through times when models have failed with some of the best modeling techniques to create an outcome that's superior than if you only had one or the other. So that's a sustainable advantage again. And then after that, you need a technology platform that can actually deliver these complicated models and actually deliver them in a timely fashion. Most banks today, for example, are still using SaaS as their kind of modeling platform. And the only models that can run reliably fast on that are logistic regression. So even if a great if they can manage to hire a great data scientist, question mark, those guys can actually create the model. It can't be implemented in the production system. So thus you have to create all those three together to be able to actually have an advantage. And that, I think, is a sustainable source of advantage because it's hard to replicate all three together.
So you're not afraid of, in a year or two, the incumbent banks, sure, they're slower, but eventually they will get to the digital side as well, and therefore eat your market share.
So I think yes, they will continue to catch up, but we are not going to stand still either, right? So we're going to move further ahead. And there are a number of things when I look at incumbents that they have to struggle with. The market is changing on them dramatically. So, I'm looking at open banking, which happens next year, which is going to fundamentally threaten their business models. Most retail banking profits today in the UK are made of one of two things. Either people leaving their money in current accounts and savings and not earning anything, or people forgetting to transfer their money out of tracker mortgages or not refinancing at the right time. Right? That's the source of retail banking profits today, and open banking threatens that. So they have to kind of react to that, versus we do not have that legacy and thus have the luxury to continue to build our competitive advantage and our customer offering. And that makes me think that we'll continue to stay ahead.
I think we just have time for one last question. So if you look at this, how this evolves in the next 5 years, this landscape of all these alternative lenders, where do you see it headed? Is it the new guys versus the existing guys? Is it the new guys fighting each other? Where do you see it headed?
So I would think that over a period of time, if you start with what the customer wants, right? The customer wants a great experience delivered digitally, and they want providers they can trust, right? It will take a long time for the incumbents to actually deliver on all those three. That's a fundamental change in their business model, fundamental change in their tech stack, and fundamental change in their culture. That's a lot of reinvention to do. So I think over a period of time, I expect them to continue to lose share, and thus more opportunity for newer players to come in. I also expect that, historically, money has always been made in finance through lending. So I would expect that businesses that know how to lend, this is a great opportunity for them to grow and establish themselves as alternatives to the incumbents.
Great. We're out of time. Thank you, Jaidev.
Thank you.